Welcome to the Insurance and Money Podcast. We're here to educate on the topics of insurance and money. I'm your host, Carla Howard. I want to thank you for tuning into the show today. Today, our topic is life insurance. Why everyone needs life insurance and the different types of insurance. Make sure you tune in every Wednesday at 7 o'clock p.m. On this show, you can expect to learn about the different types of insurance and how they relate and apply to you. Also, we'll discuss your money as well, such as checking and savings accounts, credit cards, and mortgages. On our last episode, we talked about the need of life insurance and also the dangers of not having life insurance. Today, we will discuss why is it important to have life insurance on your children. Now, parents don't need the signature and permission of children to purchase life insurance on them if the purchase is made before the age of 15 years. But don't wait until they are teens. You can buy children's life insurance after they are born, and it's also inexpensive. Yes, a 25,000 whole life child policy will only cost a little less than $150 a year. Now, that's not breaking the bank. I'm sure you'll agree with me. And that should be a given because you should at least have a burial policy. Remember in the previous episode, we talked about not wanting to have to go door knocking or having to set up a GoFundMe account to bury our loved one? And for under $150 a year, that premium doesn't change during the life of the child's life. So buy it. Even when the child is adult, the premium doesn't change. However, why not use this time to begin setting them up for the future? And this will be a small investment into their future. So that brings us to another form of life insurance, universal life. I have found that many people haven't heard about universal life insurance. Well, I believe education is the key. So, what is universal life? Universal life is a permanent form of life insurance. Some consider it a cross between term and whole life insurance. It will provide a death benefit for your entire life. Whole life has fixed premiums and death benefits, which are not always allowed to be changed. But universal life allows you to adjust the death benefit and premiums within specified limits. So, universal life has flexibility, premium flexibility, death benefit flexibility, and an investment component that whole life and term insurance doesn't offer. The investment component is a huge benefit as the cash value can be invested into various options and the interest rate can vary. However, there is also a fixed rate so you don't lose money. There aren't any cash value options in term policies. Now, let's look at an example of how universal life can benefit a child. A child age 5, let's say you're going to purchase an index universal life insurance policy or an IUL. By index, the cash value growth is linked to a stock market index. Now you're prepared to pay $50 a month or $600 a year. It's your child, isn't it? Isn't he or she worth the investment? And $50 a month isn't a very large investment. So what would that get? The initial death benefit is $212,767. At the age of 10, the guaranteed cash value is $873 and the death benefit is $213,640. The non guaranteed cash value is $1,679 and the death benefit is $214,446. This is set to an increasing death benefit option. Now let's look at age 40. The guaranteed cash value is $2,200 and the death benefit is $214,967. And the non-guaranteed cash value is $45,669 with a death benefit of $258,436. There is also an option to increase the premium. And note the child is an adult and doesn't need to qualify for continuing the policy, which in this case will last up to age 93. Adding a small additional premium can take it up to age 100. Keep in mind that at age 40, your premium will be more than $50 a month if you were buying a policy with a high death benefit, and the cash value component that would take you into your twilight years. There are many options you can make to take this policy to age 120 to 100 or all the way up to 120 with universal life. Can you see the benefit of having a universal life policy established early in life? This is just one example of many that I could share that would show you why it's advantageous to get a life insurance policy early in life. And in this example, there is a small amount that's put in and it secures the life insurance need. We'll get back to universal life in a moment, but first, I wanted just to share that it's very important to remind you that when you put in your application for life insurance, please answer all the questions honestly. Because at the time of death, you don't want the insurance claim to be denied. And where's the honor of finding a lawyer to sue the insurance company when the claim is denied and you could have just been upfront and honest to avoid that trouble for your family? I know we briefly discussed this matter last week. However, I have found as a licensed insurance agent, people sometimes are just not forthcoming with correct information when applying for life insurance. Now, it's not everybody, it's just that small few. And I have seen the consequences that can be devastating for family when that occurs. However, I've also seen lives change as a result of having the proper amount of insurance. When a breadwinner passed, financially speaking, the family flourished. This is one of the main purposes of having life insurance, replacing the income that was lost due to a breadwinner passing, and also increasing the standard of living for the family that's left. Remember, insurance is an act of love. We don't want to leave our family with the burden of debt. Having the right life insurance policy will alleviate that burden. Now, let's talk about what we are going to do with that large insurance check after the breadwinner pass. First, we must do the obvious: take care of the funeral expenses and bury our loved one. Next, if debt was left, pay it off. Pay off that mortgage, pay off that car note, pay off the other outstanding expenses because that's paramount. And saving and investing is another good option to consider as well. Remember, we are setting up our family for the future. Now, back to universal life insurance. If you're buying a life insurance policy after you're 40 years old, remember term insurance is temporary and will end. So, universal life is a better option as it is a permanent policy. It has more benefits than an expensive whole life policy. You don't want to be in a situation where you purchase a term policy after the age of 40 and then at age 60 you need another policy. Because as you get older, the cost of insurance will increase. Therefore, it's important to buy as much insurance as you can when you are young. Now, I have seen instances where a client was 30 years old and in perfect health buying $100,000 term policy and was in perfect health at the time of the purchase. But as time went on, she had some health issues. So at age 50, now she needs new insurance because she couldn't afford the continuing with the expenses year to year um, policy because it goes up every year. And now she needs to buy a policy right now at the age of 50 and is extremely expensive. Whereas if she had gotten a universal life policy at age 30, when the health issues became a challenge for her at age 50, she wouldn't need to purchase another policy. Now, since we are talking about universal life, we must discuss MEC policies. Now, what are modified endowment contract or MEC policies? These are policies that have accumulated too much cash value and have exceeded the federal tax law limits according to the IRS. Remember, some of the benefits of having life insurance is withdrawing cash value and making tax-free loans as an emergency when as when an emergency arises, and that there are tax-free payments and that there are no tax requirements, whether you're taking out a loan or just making a withdrawal. Well, back in 1970s, people took advantage of the tax-free growth of the universal life policies and other policies that have cash value. They put more money into the policy than was needed, thus treating it as a tax-free haven instead of an insurance policy. So in 1988, the federal legislation was passed to limit that kind of use for life policies. The legislation HR 4333, Technical Miscellaneous Revenue of 1988. However, there's no need to worry about your policy having MEC issues because a good insurance agent will structure the policy so that those issues will not exist for you. So you can enjoy the benefits of not having to be concerned about the IRS calling your policy a MEC. Let's look at example number 2. A 40-year-old client wanted a $100,000 policy. Now, he is in excellent health. The Universal Life, or IUL, came in at $125 a month. Cash value is still calculating to age 120. The term policy came in much, much cheaper, but it's a 20-year policy and will end at age 60. And at that time, he will need more insurance and is 20 years older, so it's going to be expensive. And here's the kicker: at age 60, would he still be in good health? And buying it at that point, the premium would be more than double. I find it's best to buy life insurance when you're younger. Now, there are options to buy life insurance when you're past 60. Some companies call it final expense insurance. In the next episode, we'll go over final expense insurance as these policies are becoming very popular. And let's remember the 3 types of insurance, just as a recap: term, whole life, and universal life insurance. Term insurance is cheaper than the other 2 forms of insurance and is very affordable. And it's easier to buy large policies, such as $300,000 policies, $400,000 policies, $500,000 policies, and more. Whole life insurance is the more traditional form of life insurance. It has a cash value component, which is why most people buy it. It is also very expensive, so sometimes it's harder to buy a very large policy with a large face amount with whole life. Universal life is an affordable option to buy a large policy, but most important is not temporary insurance. It also has a cash value component as well as um, other benefits and other the other types of insurance don't offer. Each type of insurance has its benefits, so it's best to review which is better for you with your insurance agent. Thank you for tuning into the show today. Please tune in next week and we will continue our discussion on life insurance. I will have more tips and examples to share. This is Carlos signing out until next week.